Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, May 21st, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice right here we've had a very clean uptrending market for quite a while until it failed at the previous month's mid. That led to a push to the previous month's low. It tried there and then failed through it. Now it's trying to come back above it, and you can just see that it's been quite a bearish market overall to begin May and throughout. And now you see that after this pullback here, we've pulled back from there, inside day, and leaning right on top of the previous month's low. That could open up at least a retest of this low, if not a continuation down. Again, if we are to drop from these levels, if we cannot reestablish back above 2880 to 2900, then 2703.75 becomes the next major target down. So that's going to be the next major target to reach, and it's based off of this key range high. This is the key range mid. So on this pullback right here, again, is this going to be a lower high that leads to lower lows, or does this low, or does it retest this low and reject and return back up? We will see how that plays out. Right now, the bearish bias is still intact, and bears continue to at least control this near-term move. So we'll see how this shakes out heading forward. Let's take a look at the NQ. You'll see here with the NQ, for the most part, this looks very similar to the ES. A nice sharp drop here, a pullback that was pretty significant, but never really showed extreme rejection. It retested this FOMC key level from below and is now pulling back, creating what could be a lower high off that zone. Right now you see another inside day, but what's more interesting with this one is that the current overnight high is right at the previous month's midpoint, and that is at least early signs of weakness that could lead to more selling pressure. So again, if we were to drop from these levels, how far do we go? Coming back all the way to this breakout point could be in play. You know, this is the edge of the key range right here. If we go to 50% expansion, it takes you right to 7K. That's right where this whole thing kind of started on this recent move. We seem to be working back down that structure right now. So 7K may be in play if price cannot reestablish back above the 7630 to 7700 zone. Here's a look at crude oil. You'll notice here with crude oil that it's been very, very indecisive lately, especially in May. When everything else has been mostly bearish, this one has gone flat. It has had a very clean uptrending market, very, very solid. Looks fantastic, or had looked fantastic, and now it appears to be in a sideways range. You'll notice this price right here, 63.50, right where it's at. That's the previous month's close, that blue dotted line. It's also the previous month's midpoint, right around that level. And you'll notice if we bring it back this way, it's been a level that it's been holding the previous month the entire time as well, and closed right at it. So 63.50 is very, very important. We're right at that level right now. And overall, you know, there's been lots of false starts with this one. A failed rejection move here, a failed rejection move here, a failed rejection move there. And so this is just all coming back to this price, and right now this appears to be value in the very near term. We do have a very tight range that is formed over the last few days, and that could lead to a nice breakout move. 62.50 would break this thing to the downside, and perhaps you see a retest of 61s. And then above 64s would open up the next couple handles up to about 66. So that's a very narrow range to watch for a breakout here pretty soon. Above 64 and below 62.5. And again, chopping around that 63.50 for now. All right, let's take a look here at gold futures. All right, gold has been chopping back and forth as well. Here is the previous month's close, a little down, back to it, around it, back up, back to it, and now down. It's been chopping around that low as well. You can see again the rounded formation that's in play. 1270, the key level to watch now. Now that 1280 has kind of been muddied up a little bit. So this rounded top here can usually lead to major breakout potential behavior here, but usually to the downside. In this case, it could break either way, as it usually can. 1305 would be the upside point. It's been lower highs ever since the top in mid-February. So to break above 1305 would break that trend and rally this thing. We've been chopping around value for this, a long time here, and that value has been there for quite a while. And so right now we're going to see how this plays out, but 1270 is very important. Below that level could open up a return back to 1200. Rejecting, so say it were to break and reject, maybe that could lead finally to a return back up to these recent highs. We've been hanging on this 1270, 1280 zone of support and have had plenty of chances to break it and just have not done it. So I'm not ruling out the potential for a rally back up. But right now, got to keep an eye on 1270 and see how the market reacts to that zone. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.